All right, guys. I'm going to go over the stocks that are above their 50-day moving average in the S&P 500. So first things first is when I'm analyzing this, I could see from the lows to the highs that we made a move that retraced back to its 50% line. We never really made a second move to get to this high level here. So then I scroll back and then I see there was a double top. So this is a higher high, double top. So this high is higher than this one. And at that point of the retracement back to the 50% line, we had some climactic activity here, and then just kind of a rollover into a bearish leg, and I got its second leg. Now we're kind of just crawling up. These aren't like official legs up, like these aren't strong pushes up by the bulls, and it looks like we're rolling over again into what would be the second leg of this one. So then I took the measured move from this leg back down, and that measured move gets us to only 3.5 stocks above there. 3.5 stocks in S&P 500 out of 500 stocks, or 3% rather, would be above their 50% or 50-day moving average. So that's what I'm looking at from the downside. So that could be a pretty epic buying opportunity. There's likely, some buyers in these regions. So like a 25 and 15. So there's definitely going to be some reversions to the mean. And you can see every time that we hit the bottom of these channels, we revert straight to the mean. It's very mean reversion heavy. Looking at this ticker, and all this is just a composite consolidated version of how many stocks are over their 50-day moving average in S&P 500. So yeah, other than that, the alternative to this down move is essentially just consolidation in the zone, maybe further up and then back down. I think if we do cut rates, you might see us go up for a few weeks before we retrace back down, because rate cuts are always a biggie for momentum in the market. I think the market is priced in a lot of those rate cuts already when you look at some of the data, but we could have some more potential to the upside.